Hey guys, welcome back to the Capital Mindset Show. Hope you guys are having a great day. As always, today we're going to be talking about Salesforce. The company has run up from its recent lows. If you've been part of the community for a while, or if you've seen the analysis on Salesforce in the community, then you guys already know how I feel about this. If you've seen the last portfolio update here on YouTube, then you also know that it's part of the portfolio. It has run up about almost 16% from those lows, and we are also going to talk about it from this video's perspective on Sense Invest, posted 12 days ago. However, the video was filmed in December, and I'll be sharing you guys kind of posting my thoughts because you guys voted on it in the live stream here on Capital Mindset. So we're going to be using the Investor Day presentation and kind of talking about this business. So what does Salesforce do? Salesforce is a software as a service business. They have a bunch of products that they offer through the cloud to each of their customers. And the business actually started a long time ago and has kind of had an insane run in terms of business growth. They've actually over 10x their business since, not the share price per se, I'm talking just about the business right now, since about 2013. So absolutely phenomenal growth in terms of sales. And their involvement in the business world is actually quite astonishing. There is a high likelihood when you go work for a business, if you go work for a large enterprise, that they're going to be using at least one of Salesforce's products. Now, they're no Microsoft where it's basically almost guaranteed you're using one of Microsoft's products, but Salesforce, it's a high likelihood. And they're continuing to grow, and the addressable market for this company also continues to grow. Now, I'd caution on what they say is the addressable market because, of course, we're going to be looking at a sales pitch in just a minute, the sales presentation, I like to call them, or of the stock. But I do believe, at my personal opinion, that I acquired Salesforce at a decent price. However, it's not the best price. I believe that it was a good price for a fantastic business, which is actually the playbook that I would like to get involved with. Now, with that being said, we're going to go over to the presentation here. So here's the presentation, and I'm going to kind of drag you guys down over here. So this slide, we're going to see it actually a lot. They repeat this slide for a lot because it's changing the narrative. You see the word a new, because they're trying to say, we're turning a page. We're changing strategies. We're doing something different. All right. So I agree with that. And we see a new day for Customer 360, a new day for profitability, keyword, and a new day for shareholders. All right, so we're gonna investigate a little bit. And in this slide, actually, there's some slide decks or slides that I actually think are kind of interesting from our perspective as shareholders. Well, I'm already a shareholder, but point taken. All right, so the Salesforce Customer 360 advantage. What they're showing you here is that the more products that a customer uses, the less likely they are to leave, as shown by the attrition rate right here. And as you can see next to that, you also see the average ARR, or annual recurring revenue per customer versus single cloud customer, and it's 3 times for 2 clouds, etc., and basically exponentially grows. The next slide is also quite important. So if we actually go over to the next slide here, we see that just 20% of their customers make up 85% of their ARR. That's absolutely incredible. And if you see that 7, it's very tiny in terms of percentage of customers, but look how much it makes up in terms of revenues. Absolutely incredible there. So that's, again, part of the narrative, that they can kind of get into a business and they start to offer more and more products to that business, and the amount of growth that they can have by just not only acquiring new logos, but also growing by offering more and more and more products to those existing customers. So 2 avenues of growth there. So again, the land and expand track record, that's basically what I just talked about there. So if they show you what they kind of see out into the future of how they can kind of continue to grow, they say, okay, look at this. So ARR growth, we see, okay, forward year 2007, forward year 2022. Starting cloud count is now higher than it was in 2007. And then current cloud count kind of goes into the existing. So you see forward year 2007, 1.2, and all those customers now have about 5.8. So they're growing, they're landing and expanding. That's basically all this slide is trying to tell you. Okay, so we'll go down here to another slide, kind of skipping all these slides because, okay, these are nice. Kind of $50 billion target by management by 2026 implies a 70% CAGR, and that is not including any acquisitions that they do end up making. So keep that in mind, but I do think that's actually quite achievable for this business, but we'll kind of get to that in just a second. Again, I told you, you're going to see that slide again and again and again. So here's the slide again, and we'll move past this slide because I just wanted to show you that's there. All right, so margin progression, they're trying to increase their operating leverage. Absolutely, 270 basis points, all fair, all fine. And this slide down here is actually really important. So kind of skipping past this, and it's this one right here, inorganic innovation. A lot of the growth that this business does achieve is from acquisitions. And let's talk about Slack for a second, because they absolutely, without question, overpaid for Slack. Look at the date they paid for it, though. July 2021, the peak of work from home, the peak of the COVID pandemic kind of, transition, and people thought that was going to continuously expand into the future and grow and grow and grow and grow. Absolutely. All right. So then you see Tableau, MuleSoft, and et cetera, et cetera, et cetera. What you see on the right-hand side is the revenue growth rate. They've kind of acquired the business and grew the business internally. Again, they get a new business and they say, hey, customer, we have another product to offer you that we didn't have before. We can grow this for you. And so together as a group, as a family of businesses, they're trying to tell us that they benefit together. Okay. But they did overpay for Slack. Do want to say that. Now, Tableau, many of you may or may not use Tableau in your business, depending if your business actually needs you to be kind of like a mini data scientist or mini data analyst, etc. But yeah, Tableau is actually a pretty good product. I think Alteryx and Tableau, I kind of prefer Alteryx over Tableau, but Tableau is still pretty good. And then Slack, I think all of you kind of know what Slack is. All right, so kind of going over here, this is interesting because this is, again, remember the words they were using before, a new day for shareholders, a change in the approach. So first ever share repurchases. So we have $10 billion share repurchase authorization with a new policy of 30 to 40% average free cash flow return to shareholders in the form of something. But that's a new policy, very interesting to see there. Now, we see the profitable growth at scale, $50 billion forward revenue target. This is probably the most important slide here. 17% CAGR growth rate projection going forward to 2026, and 25% basis growth in margins. And we also see a $10 billion share buyback. Again, kind of summarizing it all together. So what do I think about the business? Solid business. It was a fair price for a fantastic business. And do I think they're going to grow at that 17% target? Yes, I think actually they're going to surpass it, in fact. And I think that they're going to surpass it because it is yet to be known what other acquisitions they might make that can be actually quite accretive, and they can grow those businesses even further. I'm going to be watching each acquisition they make because I'm kind of not too happy with the Slack acquisition. So I don't want to make it like it's all rosy. And I think that's the biggest risk here, is that the company gets a little bit too trigger happy with their acquisitions, and they forget to be conservative, and they kind of throw money down the drain. So I want to be careful with that with this company. And as far as the switching costs go, I think they're absolutely immense. I think that the business is going to continue to grow, and people really underestimate the use cases for Salesforce's products. And the business world is going to continue to want to innovate, become more efficient, cut costs, and Salesforce and other businesses like Salesforce are going to be there to offer them that ability to do so, become more efficient, etc. Especially during a downtime where you might say, well, a lot of companies are trying to scramble to figure out ways to become more efficient. And that happens during, let's say, a recession, when companies are saying, well, the good times are over. We need to kind of focus on improving our margins, improving our business lines. And, it's not just easy money, easy business operations, et cetera, which I don't think we were necessarily in, but that's kind of against the narrative of, okay, recession, therefore businesses don't invest in their business. That's not necessarily true. Okay, so with that being said, what are the prices that I like Salesforce at? Well, personally, I already have my position, and I like the cost basis that I'm at. I would like to add more to Salesforce. The prices that I kind of penciled out of high attractiveness for this business would be 112 and below. And so personally, I'd be waiting for those prices if I wanted to add more to Salesforce. And other than that, if it continues to run, I'm happy with where it's at. And I will, be looking to, let's say, the exit or maybe never exit. I don't really know. I will see if that happens. I will update you guys with another future video. Now, if you guys have liked this video, go ahead and feel free to like, share, and subscribe. And let me know down in the comment section below, what do you guys feel about Salesforce? Do you guys like this business? Or are you guys kind of waiting on the sidelines here? Are you guys saying, there's some things that you want to kind of see the business perform first, or do you just want a much better price? Because that's the beauty of a market. We all are, looking at these businesses and coming to very different conclusions about what we like to enter. Do we even want to participate at all? So I appreciate your guys' thoughts there. All right, I will see you guys on the next one. Have a good one. Bye.